Hello students, welcome back. This is Mrs. Mercado speaking. This is going to be the first lecture for Accounting 2402. This is Principles of Managerial Accounting. This lecture deals with Chapter 15. This is Introduction to Managerial Accounting. And the textbook that we are using is Financial and Managerial Accounting, 15th edition by Warren, Jones, and Taylor. I just want to remind all of you to please ensure that you have listened to the course orientation before you begin working on any of your assignments, that you print out your syllabus and that you keep it handy. That way every week you know the assignments that must be completed for that specific week. Okay, it's very important that you keep track of all of your assignments because I don't grant extensions unless there is a very or a very good excuse as to why you were not able to complete your assignments. You just forgetting that there was an assignment due or that you had to work are not valid reasons, for not to complete your assignments. We need to make sure that we organize our time and that we make sure that we complete all of our assignments for the week. The assignments open on Monday and they close on Sunday at 11 p.m. So we have 7 full days to complete your assignments. I also want to excuse myself. I have a cough that won't go away, so I might be coughing throughout the presentation, but I need to make these recordings, so I apologize in advance if I cough here and there, but it's just I can't get rid of this cough. I'm sorry. Okay, so how are these presentations going to work? So this is the first presentation for Accounting 2402. The first chapter that we're going to be covering, like I mentioned, is Chapter 15. I will not be going over the actual content in the actual chapter. I'm going to let you all read the chapter. It is the student's responsibility to ensure that they have read the chapter before they begin working on any of their assignments. Okay, there's a lot of very important components covered in the chapter. For you to be able to understand my lectures, you must have read the chapters because I am not going to go over the information in the book. Okay, so you read and then we're going to apply what was read to actual real life problems. Okay, so that is what I'm going to be focused on. My lectures are focused on problem solving, not so much covering the content in the chapter. If you read something, you have a question, you need clarity on it, please feel free to contact me. Either send me a Blackboard message, whatever works for you. But I will not be covering the actual content of the chapter. More, these lectures are problem solving oriented. We're application based. Now, I will not be going over every single problem in your homework. I have selected a couple of problems and I will go over those, and then you'll be left to deal with the rest on your own. That way you can practice your analytical skills and then see if you understand what you're reading and apply what you've learned. If you have questions when you're solving your homework problem, you can figure it out. Please feel free to contact me. Make sure that you include your name, the specific problem number that you're having issues with. I want to see what you're doing. I want to see your work. That way I can provide guidance. Okay. Things like, Miss, I am completely lost, really don't help me. I need more specific information as to where is it that you're struggling so I can be able to provide guidance, okay? And yes, you're going to be lost if you did not read. That is why it is very important. It is critical that you read the chapter before you begin doing anything. Okay? So in this chapter, we have several concepts that are introduced. For example, the product costs are introduced, in which the textbook explains that product costs are basically composed of 3 elements of manufacturing costs, which are our direct material costs, our direct labor costs, and our factory overhead costs. Okay, so these costs are basically treated as assets until the product is sold. So we are manufacturing, we are making a product, and those 3 components make part of that product, and those costs are treated as an asset until that finished product is sold. Okay, period costs consist of selling and admin expenses. Okay, and these are basically expenses used in the generation of revenue during the current period. Okay, and these are recognized as expenses on the current period's income statement. So we are going to be preparing some financial statements here for a manufacturing company. later on in the presentation. It's very important that we understand all of the components or all of the information presented in the chapter. Please, I cannot stress it enough, read the chapter, okay? Okay, so I'm going to go ahead and I'm going to jump in. I'm going to start by first explaining the three different types of problems, that you're going to be seeing on your assignments, okay? So you're going to have problems to start with the word BE, okay? Now, BE is for a basic exercise, okay? Basic exercises are the easiest types of exercises that you're going to have. They're kind of like to get you started, okay? And then we have exercises, okay? Exercises are medium, okay, in difficulty, okay? And then we have problems. Problems are more complex, they're more comprehensive. So the BEs are basic exercises, those are the easiest. Exercises are medium, and then problems are the harder ones, the more comprehensive problems. So you're building from the BE exercises, the basic exercises, to the exercises to the problems. So you can be able to understand and be able to apply the concepts being provided, okay? Now this is accounting. Expect to have a lot of homework. In accounting, it's not just me about talking about concepts and terminology like in some of your business classes, where a lot of it's common sense kind of a thing. In accounting, it's more specific, it's more black and white. Okay, either you know it or you don't. So in order for us to be able to do well, we need to practice. Okay, the only way that we're going to be able to learn accounting is by doing it. Okay, you're not going to learn accounting by me talking 2 or 3 hours of accounting concepts. Okay, I don't learn that way, and I know a lot of students are more hands-on approach. That's the approach that I like to do, because when you go out there to work in the workplace, you're not going to talk about accounting, you're going to do accounting, okay? And that is what we're going to do in my class. We're going to actually go in there and solve problems, okay? So that way you can be prepared when you go out there to the workforce and they ask you to do all of these calculations, you can be able to do them, okay? So let's get started with the first problem that I'm going to go over. This is BE 15.5, and it deals with cost of goods sold, cost of goods manufactured. Okay, so the problem reads, Glenville Company has the following information for April. Okay, and then they give you the cost of direct materials used in production of $280,000, direct labor of $324,000, factory overhead of $188,900, work in process inventory at the beginning of the month $72,300, work in process at the end of the month $76,600, finished goods inventory at the beginning of the month $39,600, and then finished goods inventory at the end of the month at $41,200. Using all of that information provided, for April we have to determine A, the cost of goods manufactured, and B, the cost of goods sold. Okay, so the cost of goods manufactured is how much did it cost us to manufacture the goods that we're selling. Okay, that's what they're asking you. How much money did you spend on manufacturing whatever is it that you're manufacturing? Okay, so we're going to start off with our beginning work in process inventory. Okay, so this is a company that's been established, and they had items in their work in process. Work in process basically means these are goods that were started, but they were not finished. So they're still in process. There still needs some work to be done so they can be completed and sold. So work in process, that is going to be our starting point. These are the goods that have been started last period, but they haven't been finished. So what's going to happen this period in April? But we're going to finish them. Okay? We want to make sure that those goods that were started last month get finished this month. So what can we do with them? So we can sell them. Okay? So our starting point is going to be our work in process inventory. If you have any. Some companies will have work in process inventory, others will not. Okay? But if you have work that was started the prior month, and we're going to continue it on this month, that is going to be your starting point. And in this case, our work in process is, as of the beginning of the month, is $72,300. Okay. Now, what I'm going to do is I'm going to be crossing out these numbers. That way, I know that they've been used. Okay. That way, I don't reuse them. I'm a very visual learner myself. So when I'm working out these problems, I tend to highlight or scratch off or do a lot of things to it. That way I know that those numbers have been used, and when I'm finished, I should have used everything that I should have used. I'm not missing anything. Okay, so that's what I'm going to be marking off as I use. So my beginning working process was $72,300. Okay, let me put some commas here that just for clarity for myself. Here we go. Okay, now I'm going to figure out how much did I spend during this month, in the month of April, in new production. Okay, so yes, we have to finish the goods that were started last month, but on top of that, we're going to start producing new goods this month, in the month of April. Okay, so the first thing we need to do is we're going to have to figure out, okay, how can we start producing? Well, we need to purchase materials. Okay, if you're manufacturing something, you're manufacturing a product, you need materials to be able to manufacture it. So we're going to go ahead and we're going to do our cost of direct materials used in production. Okay, so this is how much we spend in materials that we're going to be putting into production. And the amount is $280,000. Now I'm putting it here in the first column because every time that you have to do calculations, add or subtract several numbers, you put them in the first column and then you give me your total on the second column. On the second column, you only put information if it's like a grand total, there's no calculations that need to be done, you put it on the second column. If there's calculations that need to get done, then you put it on the first column. Okay, so I'm going to put it here because we have some calculations to do. So the first thing that we have is our materials that we purchased so we can put in production. So I'm going to scratch that off. Okay. Okay. Now the next thing we have is, okay, you've got the materials. What are you going to do with it? Well, you're going to take it into your factory or your manufacturing place, and then you're going to have people start assembling them, putting them together, doing whatever it is that they're doing. Okay, so we're going to have a second component, which is my direct labor. Okay, I've got my materials. Now I've got my labor. My labor, it says here that I spend $324,000 on labor. Okay, so let me scratch that off. Okay, so we've got materials, we've got labor. The third component is factory overhead. Okay, these are the three costs associated with manufacturing a product: our direct materials, our direct labor, and our factory overhead. So now we have factory overhead, and basically factory overhead are any other expenses that do not fit into the materials or labor category. This could be maybe expenses related to the factory, the utilities for running the factory, the depreciation on the equipment, stuff like that. Okay, so anything related to the factory or the manufacturing process that does not fall into either materials or labor goes into overhead. Everything else falls into overhead. And on overhead, we have $188,900. Okay, now let me mark that off. Excuse me. Okay, so now we've got our three costs: direct materials, direct labor, and factory overhead. Now I can calculate my total manufacturing cost incurred in April. Okay, so in April, we're gonna hopefully finish manufacturing what we started last month, and then we put all of these into production. We put materials, labor, and overhead. Okay, so we're gonna go ahead and we're gonna add these three components together. Okay, so I'm going to just do a formula here. So all I'm doing is I'm just adding these three. But because I'm using Excel, it just makes it easier for me to add those three components. So this number is the sum of these three numbers up here. So that gives me $792,900. That is how much I spent in manufacturing costs in the month of April. Okay, these three components right here. Okay, so now I can get my total manufacturing cost. And your total manufacturing costs are any cost to manufacture. And then we have our beginning manufacturing costs. We have to finish manufacturing those $72,300 of product that we had from last month, and then this is what we put into production this month of April. So we're going to add those two together to get your total manufacturing costs. Okay. Now, did we finish manufacturing everything that we started working on? Okay, that is the question. Did we finish manufacturing what we started in April? And did we finish manufacturing everything that we started? Well, let me go back. Did we finish manufacturing everything that we had started before April? Because this is our beginning work in process inventory. This is what we started last period. And then this is what we put into production in April, this period. Did we finish manufacturing the whole $865,200 of manufacturing cost? Well, if we see here in our problem, at the end of the month, we still have $76,600 worth of product that we have not finished manufacturing. It's still work in process, okay? So we have $76,600 that still needs to be processed further the following month, so we can finish it and be able to put it in our shelves. Okay, so because these goods have not been completed, we cannot count them as total manufacturing costs for this period because they're still pending to be completed. Okay, so what I'm going to do is I'm going to get that ending work in process. Okay, so we're going to get our work in process inventory as of the end of the month, and I'm going to deduct it. I'm going to deduct it because those goods have not been completed. Okay, and whenever we deduct, we put it in parentheses. Okay, so I've used that number, and I'm going to go ahead and mark it off. Okay, so this number represents the goods that are still in process. They are not finished. We cannot sell them because they're still being worked on. Okay, so now I am going to go ahead and subtract that. Okay, so I can be able to calculate my actual cost of goods manufactured. How much did you actually spend during the month manufacturing goods? Okay, well, I had total manufacturing cost of $865,200. I know that I still have $76,600 of goods that are not complete. So that means that the cost of goods that we actually spend on completed products is going to be the $865,200 minus the 76. Well, we can just add them because it's a minus number. So that will give you $788,600. So it's the $865,200 minus the $76,600. That will give you the $788,600. That is the cost of goods manufactured. That is how much you spend this month manufacturing your goods. And these have to be completed products. Okay, so these have to be merchandise that are actually completed and we're actually able to put to sell. Okay, so that is how we calculate our cost of goods manufactured. Okay, now the second part is to determine the cost of goods sold. Okay, so cost of goods sold, it's basically we need to identify how much did we spend on those goods that were actually finished and we're actually being able to sell. Okay, now to do that, we're going to start off with our finished goods inventory. Okay, now finished goods are products that are completed from beginning to end and they are able to be sold to our customers. Okay, they're done, they're complete, and they can be sold. So if you notice here, we have finished goods inventory at the beginning of the month of $39,600. So what that means is these are goods that are in our warehouse, they're done, they're ready to be shipped out, they're ready to be sold. Okay, they have not been sold, they're sitting in our warehouse ready to be sold. Okay, so I'm going to start off with my finished goods inventory as of the beginning of the month, which is April the 1st, and we have $39,600. Let me mark that off. Okay. So that is what we had from last month that was completed. It's being stored in our warehouse and it's ready to be sold. Okay. Now what we're going to do is we're going to bring in the cost of what we manufactured that specific month, in the month of April. Okay. So we're going to bring our cost of goods manufactured. And where are we going to get that number from? We're going to get that number from up here, right there. Okay. So that number is going to go over here to the 788,600. Okay. So my cost of goods manufactured, that is how much money you spent manufacturing your product or your goods that specific month. Okay. So let me see if I can do kind of like an arrow right here. Okay. Well, that looks ugly. Let me try just putting a down arrow. Okay, so that is going here. Okay. So you're going to bring that number down to over here so we can put our cost of goods manufactured. Okay. So now that we have our cost of goods manufactured, okay, we can calculate our cost of finished goods available for sale. Okay, so we had $39,600 worth of goods available for sale from last month. This month we manufactured $788,600 of goods. They're available to be sold and they're sitting in our warehouse. Okay, so that is how much we manufactured in the month of April. So now we can get our cost of finished goods available for sale. This is what we have sitting in our warehouse that we can sell to our customers. Okay, we're going to add those two numbers together. Okay, that gives me $828,800. Okay, now out of everything that we have sitting in our warehouse, okay, we need to figure out how much did we actually sell. Okay, well, we have $828,200 available to be sold. Okay. Did we have any sales during the month of April? Okay, well, we're not provided with that number. Okay, we need to figure out, what is my cost of goods sold. Okay, so I know that we have $828,200 available for sale. Now the problem tells us that at the end of April you have $41,200 worth of merchandise sitting in your warehouse that you have not sold. Okay, so at the end of the month you have $41,200 that you have not sold. So what are we going to do? Well, I know that I manufactured, or I had total available for sale of $828,200. I know that at the end of the month I have not sold $41,200. So what am I going to do? I'm going to subtract that number. Okay, so I'm going to have my finished goods inventory at the end of the month. Now this represents what you have not sold during the month, and I'm going to subtract it because this is the inventory that you have available in your warehouse to be sold. They're done, they're finished, but you haven't sold them for whatever reason. Okay. So now that I know that we had cost of goods available for sale of $828,200, I know that I have $41,200 sitting in my warehouse. Now I can figure out that what I actually sold, my cost of goods sold, this is what you actually sold for the month, is going to be the $828,200 minus the $41,200, and that will give you $787,000. Okay, let me double underline it right there. Okay. So, my cost of goods sold, that means that during the month of April, this is how much you sold. You sold $787,000. You have $41,200 remaining of finished goods that you have not been able to sell. Okay, so if you notice here, I've used up all of my numbers. Okay, and I was able to calculate both my cost of goods manufactured. This is how much it costs you to manufacture your goods. And then we can calculate our cost of goods sold. This is how much you actually, the actual number, the dollar amount of the goods that you actually sold to customers, finished product. Okay, and there's a difference. Why? Because we did have some beginning finished goods inventory, and then we did have some ending finished goods inventory. So we do have some goods that have not sold in our warehouse. Okay, so that is how we tackle this specific problem. This is basic exercise 15.5. Okay, so just follow along. The next problem we have is an exercise. Okay, this is exercise 15.11. Okay, so this problem deals with cost of direct materials used in production for a manufacturing company. So it says Walker Manufacturing Company reported the following materials data for the month ending June the 30th. We had materials purchased of $845,700. Materials inventory at the beginning of the month, June the 1st, $238,500. And materials inventory at the end of the month, as of June the 30th, of $190,400. They're asking us to determine the cost of direct materials used in production by Walker during the month ended June the 30th. Okay, so this is something very similar to what we did last time in the last problem. Okay, so in this particular problem, they're talking specifically about materials, right? So what are we going to start off with? Okay, so this is a company that has been in business. They have materials inventory as of the beginning of the month of $238,500. So what does that mean? That means that they have materials left over from last month to this month. Okay, so as of June the 1st, I have materials, raw materials, in my warehouse of $238,500. Okay, so that's going to be my starting point. Okay, my materials inventory. Okay, so let's start right here. Materials inventory, June the 1st. And that is, and for this one I just need one column. I don't need two. Excuse me. So my materials inventory is $238,500. Let me put some commas here. Okay, there we go. So I've already used that number, so I'm going to scratch it off. Okay. Next, during the month of June, we purchased an additional $845,700 of materials. Okay, so we started off with materials of $238,500, which was our leftovers from last month. And during the month, we bought more materials. So we have materials purchased of $845,700. Okay, so I'm going to scratch that off. Okay, so now I can be able to get my cost of materials available for sale. Okay, and that's going to be the total materials that you have available for use. Okay, so we have cost of materials available for use. This is what you have available in materials in your warehouse. I forgot an S over here, guys. Here we go. Okay, so I'm going to put an underline, and I'm going to add those two numbers together. Okay, my beginning material inventory plus the materials I purchased during the month, and I have $1,084,200. Okay, so that is how much I have available in materials in my warehouse, raw materials. Okay, now at the end of the month, you have $190,400 left of materials in your warehouse. These are materials you have not used during the month. Okay, so you still have that left over in your warehouse. So what are we going to do? Well, we're going to deduct that. Why? Because we haven't used those materials yet. Okay, so I'm going to go ahead and I'm going to do my materials inventory. Materials inventory as of the end of the month, which is June the 30th. And I'm going to put this in minus because these are the materials that are left over. I haven't used them yet, okay? And remember, we're trying to figure out the cost of direct materials used during the month, okay? So, how much materials did we actually use? Well, we had 1,084,200 in materials available. We did not use 194,400. That's still sitting in our warehouse. That's available. So then that lets us know that my cost of direct materials used in production is, let me go ahead and put an underline here. So I'm going to go ahead and I'm going to add those two numbers together, okay? The 1,084,200 minus the 194,400, and that gives me 893,800, okay? So that is the cost of direct materials that were actually used during the period. So we used 893,800, and we have 190,400 remaining. That has not been used, okay? And we've used all of these three numbers in our calculations, okay? So, they're asking us to determine the cost of direct materials used in production. We always start off with our beginning inventory. If you have any from prior month, which we did, we had 238,500 in materials from last period. During this month of June, we purchased 845,700 of materials. So we have available 1,084,200. You add those two numbers together. We know, based on the information provided, that we have leftover material about 190,400. That material has not been used. So that means that during the month, we actually used up $893,800 worth of materials. That is how much was put into production for that specific month of June. Okay, so that is the second problem that I'm going to be running over. That was exercise 1511. Okay. The third problem I'm going to be going over is exercise 1516. Okay. So this problem reads, this is dealing with cost of goods sold, profit margin, and net income for a manufacturing company. It says the following information is available for Bandera Manufacturing Company for the month ending January the 31st. So we have cost of goods manufactured of $4,490,000, selling expenses of $530,000, administrative expenses of $340,000, sales of $6,600,000, finished goods inventory at the beginning of the month of January of $880,000, finished goods inventory January the 31st of $775,000. Okay, so for the month ended January the 31st, we have to determine Bandera Manufacturing's A, cost of goods sold, B, gross profit, and C, net income. So this is a wonderful problem. It's going to allow us to calculate three different things. Okay, so the first thing that we're going to do is calculate our cost of goods sold. Okay, cost of goods sold. Okay, so to calculate our cost of goods sold, we're going to look and we're going to see if we had any finished goods inventory from last month. Do we have any goods in our warehouse that are completed and done and ready to be sold? Okay, so let's look at the information. Well, guess what? We do. We have finished goods as of the beginning of the month of $880,000. So we have $880,000 worth of completed or finished product sitting in our warehouse. So that's going to be my starting point. We have our finished goods inventory as of January the 1st, okay? And that dollar amount is $880,000, okay? And let me make these numbers. There we go. And I'm going to go ahead and I'm going to mark that number off. That way I know that I've used it. Okay? Now, that is what you started off with from last period. Okay, these are the finished goods from last period that you were not able to sell. They've been completed, they're sitting in your warehouse, they're available to be sold. Now, during this specific month, you spend $4,490,000 manufacturing more product. Okay, this is your cost of goods manufactured for the month of January. So you spend $4,490,000 in manufacturing costs for this period. So I'm going to go ahead and add that there. And here they do it pretty easy because they've given you all of the amounts. Okay, so during the month I spend $4,490,000 manufacturing additional product. Okay. Okay. So now I can get my cost of finished goods available for sale. Okay. This is how much I have available in my warehouse to be sold. These are finished products. Okay. So what we're going to do here is we're going to add those two numbers together. Your beginning finished goods inventory plus the cost of goods manufactured for the period. We're going to add those two together. And that's going to give us $5,370,000. Okay. Now, this is what we had sitting in our warehouse, completed product available to be sold. Okay. Now, did we sell everything? Well, if we look at the problem, it says that at the end of the month, at the end of January, we had finished goods in our inventory, in our warehouse, of $775,000. So that represents the amount of goods that we did not sell. Okay, so I'm going to subtract that number. Okay, and that is going to be $775,000, and it's being put as a minus sign because it's a deduction. Those are the finished goods that we are still having in our warehouse that we have not sold. Okay, so now we can calculate the cost of goods sold. This is what was actually sold. Okay, so I know that I had $5,370,000 available for sale. I know that I did not sell $775,000. So to calculate the amount that you sold, you would have to add those two together. So it's basically the $5,370,000 minus the $775,000. That would give you a cost of goods sold of $4,595,000. Okay. So that is what actually was sold during the month of January. Okay. And let me mark that off because then I forget and then I get confused at the end. So we've already used that number right there. Okay. Okay. Now requirement B. We have to calculate my gross profit. Okay. Gross profit. Okay. To calculate your gross profit, we always begin with our sales. How much did you actually have in sales? Well, according to the problem, we had sales of $6,600,000. Okay, that is what we sold our products for to our customers. That's how much they paid us. They paid us $6.6 million. Let me mark that off. Okay. Okay, so we sold our goods for $6.6 million. How much did we spend manufacturing those goods? Well, that was calculated when we calculated our cost of goods sold. So I'm going to put that little arrow down right here. So that number is going to go over here. Okay. So we're going to subtract our cost of goods sold. This is how much we spent manufacturing the product. Okay. So the sales is how much we sold it for. We sold it to our customers for $6.6 million. We spent $4,595,000 manufacturing the product. Okay, that is how much we spent making it. Okay, now this is my cost of goods sold. That is how much we spent making the product. So I'm going to subtract my cost of goods sold figure. Now, if your sales are greater than your cost of goods sold, then you've got a profit. Okay, if your sales are less than your cost of goods sold, then you've got a loss. Okay, you don't want to be spending more money making your product than what you sell it for. That's just not a no-brainer, okay? We always want to mark up our product. Mark it up, okay? So we have gross profit. Okay? This is my gross profit, and I'm going to add those two numbers together. So it's basically the 6.6 million minus the 4,595,000. That's going to give me a gross profit of 2,005,000. Okay? That is my gross profit. Okay? Now, this is gross. This is before any of your operating expenses. Okay? So now we have to calculate my net income. Okay? Net income. Okay, so to calculate your net income, our starting point will be your gross profit. Okay, the number that we calculate here is going to be our starting point. Let me put a little arrow. So that number goes right there. Okay, so it's going to be gross profit is my starting point, and my gross profit was 2,005,000. Okay. Now, I have some selling expenses and some administrative expenses that we have to pay. Okay? So that gross profit that we have to cover those additional selling and admin expenses. Okay? So we have our operating expenses. Okay? The first expense we have is our selling expenses. Okay? My selling expenses are $530,000. Okay? Let me go ahead and I'm going to mark that. The other expense we have is our administrative expenses. Okay. My admin expenses are $340,000. Okay, so that's that right there. Okay, so I've used all of my numbers. So I'm going to add those two together to get my total operating expenses. Okay, so I'm going to add those two together. These are my total operating expenses of $870,000. Now, because these are expenses, this is money that we had to spend, I'm going to put that in a minus sign. Okay, these are my expenses. I paid out money. So I had a profit of positive $2,005,000. I spent $870,000 in my operating expenses. So now you have to compare. Okay, you're going to subtract your gross profit minus your operating expenses, and that will give you your net income. Okay. So the $2,005,000, which was your gross profit, minus your operating expenses of $870,000 will give you a net income of $1,135,000. Okay, that is the third component of the problem. So we were able to calculate our cost of goods sold. With the information from our cost of goods sold, we're able to calculate our gross profit. From the calculations from our gross profit, we're able to calculate our net income. Okay, so if you get one of these incorrect, then everything else will be incorrect. That's how it works in accounting. In accounting, you can't make one mistake because that mistake trickles to the rest of the problem, and then everything else will be wrong. Okay, so it's very important that we are clear with the calculations. If you need to, you go back and figure out what needs to get done, because it's a flow of information. Whatever we calculate in one flows to the next, flows to the next. Okay, so that is the third problem that I'll be covering. Now, the last and final problem that I'm going to be covering is problem 15.5. Now, pay extra close attention to this problem because you are going to be seeing something similar to this on your test. Okay, so that is why I'm taking the time to go over it with you. Okay, so close attention. You'll be seeing something like this on your upcoming test. Okay. So this problem deals with the statement of cost of goods manufactured and an income statement for a manufacturing company. Now, if you go through the chapter introduces some new accounts that are incorporated into our financial statement for a manufacturing company. The financial statements for a manufacturing company differ than that from a service company. So the chapter explains the differences, so make sure that you go back and you read that section. And now we're actually going to apply and prepare those financial statements, okay? So it says the following information is available for Robstown Corporation, okay? Then they give you a whole bunch of information. This is the beginning of the year and as of the end of the year. So as of January the 1st, balances, December 31st, balances, okay? Instructions. Using the information provided here, we have to prepare a statement of cost of goods manufactured, and then we have to prepare an income statement, okay? So the first thing we're going to do is we're going to prepare our statement of cost of goods manufactured. Remember, when we're preparing our financial statements, we always start off with the name of the company, the name of the financial statement, and the period that we're doing it for, okay? So let's start off with our statement of cost of goods manufactured. Okay, the first thing we need to look at is, do we have any work in process that was started last period and was not finished, that we have to finish this period? Well, the problem says here that we have work in process as of the beginning of the year of $63,900. Okay, so yes, we do have work in process. That is going to be our starting point. Work in process inventory as of January the 1st, okay? So, my working process inventory is, my beginning working process inventory is $63,900. Okay. Now let me put some commas here. Okay. So I've used that number. Let me start scratching off. That way I don't get confused. Okay. Okay. Next, we're going to figure out our direct materials for this particular period. Okay. Remember, we have three components that we have to figure out: direct materials, direct labor, and overhead. So the first component is direct materials. Okay. So, do we have any materials left over from last period? Okay. And if we look at materials, we have, as of the beginning of the year, January the 1st, we have $44,250 sitting in our warehouse of raw materials. So that's going to be my starting point for materials. We have materials inventory, January the 1st, and we have $44,250. Okay, let me scratch that off. Okay, did we purchase any additional materials during the year? Okay, so let's look down here. Materials purchased. During the year, we purchased $556,600 of materials. So that needs to be added. So here we have materials purchased. Okay. And we have materials purchased of $556,600. Okay. So now I can calculate my cost of materials available for sale. So we're going to add those two numbers together. Okay? And that's going to give us, we're going to add them together. And that's going to give us $600,850,000. Now, did we use all of the $600,850 in materials during the year? Well, if we look here, we have materials left over at the end of the year for $31,700. Those materials were not used. They're still sitting in our warehouse. Okay, so I'm going to deduct those materials that we have left over. Okay, so I'm going to deduct my materials inventory at the end of the year, which was December the 31st. Okay, and I'm going to subtract those because those are still available to be used for next year. Okay, so now I can go ahead and I can figure out the actual materials put into production for that year. Okay, so my cost of direct materials used in production for the year. Okay. So to do that, I am going to go ahead and I'm going to add those two together. Your cost of materials available for sale minus your materials inventory, and that's going to give you $569,150. Okay? So this is the actual number or the dollar amount of materials that we actually spend during the year from January through December. These are the materials that were actually put into production. Okay? We took them out of the warehouse and we started processing them into our actual product. Okay? So that is our materials component, $569,150. The next thing we have is direct labor. Okay, let's skip a line just for clarity here. Okay, so direct labor. Do they give you any information about labor? Yes, they do right here. Direct labor, $1.1 million. So this is pretty straightforward. They give you the dollar amount. You don't have to do any calculations. Okay. So we have direct labor of $1,100,000. Now, why am I putting this in the middle? Why? Because I need to get a total for my materials, a total for my labor, and a total for my overhead. Those are my three manufacturing components, remember? Okay. And then once I get the total for those three, I can bring it to the very end. Okay. So that is my direct labor. Okay. Now I have factory overhead. So anything else that does not fall into materials or labor goes into overhead. And these are costs related to my factory. Okay. So let's begin. Let's look at, and usually we look at these in order by dollar amount. Okay, the higher dollar amount goes first. So let's analyze this information and let's see what we have. So advertising expense, that has nothing to do with the factory. Depreciation office equipment, that has nothing to do with the factory. We have depreciation expense factory equipment. That's good. We're going to be using that. Okay, but let's look for our biggest dollar amount. Okay, the biggest number or dollar amount that I have here is indirect labor. Okay, now indirect labor, what is that? Okay, now indirect labor is labor for people that work in the factory but not in the assembly line. Okay, this could be maybe the cleaning crew, like the maintenance people that keep the factory clean, stuff like that. Maybe the plant manager, they don't actually produce, they're just supervising. They're not actually assembling. They're just like a supervisor. It's indirect labor. It's part of the cost for run the factory, but not really associated with manufacturing the product. So it's usually your maintenance departments or your department supervisors. They're in the factory, but they're not actually hands-on manufacturing. Okay, so we're gonna have indirect labor, and my indirect labor is $115,000. Okay, so we're looking for costs that are related to the factory. Okay. The next thing we're going to look at is the depreciation expense for the factory equipment. Okay. Now we have equipment and we have the depreciation associated with it. We're going to take only for the factory equipment because these are factory overhead. Only anything associated with the factory. Okay. So I have my depreciation expense, and this is for factory equipment. Okay, and that is $80,000. Okay. What else do we have? Let's see. Right here, heat, light, and power factory, $53,300. So we need heat, we need light, and we need power for the factory. Okay, so those are costs associated with the actual factory. So we have heat, light, and power for the factory, and that is 53,300. Okay, there we are. So what else do we have? We have property taxes for the factory, okay, $40,000. So remember, we're picking up all of the costs associated with the factory, property taxes for the factory, and that is $40,000. Sorry. Okay, up there, 40, 1, 2, 3. There we go. Let me mark that off. $40,000 has been used. What else do we have? Okay, we have rent expense for the factory, $27,000. So we're renting the factory. Rent expense, factory, and we are spending $27,000 a month on it. Okay. What else do we have? We have supplies for the factory. Of $9,500. Okay. And the last item that we will always have is miscellaneous. Regardless of the dollar amount, like you see here, I'm going in order by dollar amount from the highest to the lowest. Regardless of the dollar amount, miscellaneous always goes at the end. Okay. Even if it's higher, we always put it at the end. So we have miscellaneous cost for the factory. Okay. And that is $11,400. Okay, so those seem to be all of the costs associated with my factory. Okay, so I've already scratched them off, and I am going to go ahead and get my total factory overhead. Okay, factory overhead. So what I'm going to do is I'm going to add those together. Okay, I'm going to add all those numbers together. I'm just adding them all up, and that gives me $336,200. Okay, so now I have my total for my materials, I've got my total for my labor, and I've got my total for my overhead. Okay, so now I can calculate my total manufacturing costs. Okay, total manufacturing cost incurred in 20Y8. That's the year that we're doing. Okay, so to do that, I need to add these three numbers. I need to add my materials, I need to add my labor, and I need to add my overhead to get my total manufacturing cost for the year. So I'm going to add those three numbers up. Three numbers in the middle. Materials, labor, and overhead get added together to get your total manufacturing cost of $2,350,000. Okay. Now, this is what we manufactured. This is our manufacturing cost for the year. Okay. Now, did we complete everything that we started manufacturing during the year? Okay. So we started off with our beginning working process from last year, and then we put a whole bunch of items into production, materials, labor, and overhead this year, giving us a total of $2,550,000. Okay. Did we finish production for every single item that we started? The answer is no. If we look at the problem, at the end of the year, we have work in process of $80,000. So that means that $80,000 worth of goods are not finished. Okay, they still need to be processed further the following year. So I am going to deduct that from my total, and this is going to be my work in process inventory at the end of the year, which is December the 31st. I'm going to deduct that number, and that number is $80,000. Okay. So I'm going to deduct it because that represents the amount of goods that have not been completed. They're still in process. I can't sell them because they're not complete. Okay? So now I can actually calculate the cost of goods manufactured. This represents the amount of actual goods that were completed from beginning to end and are ready to be sold. Okay? So I am going to subtract those two numbers. So it will be the 2,005,350 minus the 80,000. So my cost of goods manufactured for the year I forgot a calculation here. I'm sorry. Let me see. Yes, I forgot a calculation right here. I was like, why am I not? I'm actually needing another cell. Insert. Okay. So we stayed right here where we added our three numbers. Okay. Our 569, our 1.1, and our 336 gives me that 2,005,350. Okay. Now, because we did have our beginning working process, I forgot that we needed to add that number to this number to get my total. Okay. So my total manufacturing cost costs is going to be the sum of those two numbers. Okay, so I'm going to add my 63,900 plus my 2,005,350, and that gives me 2,069,250. Okay, remember to always add your beginning working process if you have any, plus your total manufacturing cost for the period. That gives you your total manufacturing cost. Now, once you have that, then you can deduct your work in process inventory as of the end of the year. So as of the end of the year, we had work in process of $80,000. So I'm going to subtract the 80,000. Okay. Now I can figure out my cost of goods manufactured. See, I had forgotten one step, and that would have thrown my whole calculation off. Okay. And then that would be, we would add those together. So you get your 2,069,250 minus your $80,000, and that will give you the 1,989,250. Okay. So let's run through this, or just go through it real quickly, high level. You always start off with your beginning working process from last year or last period. You calculate your total cost of materials put into production for that particular year or period, which was 569,150. Your direct labor, 1.1 million. Your factory overhead, anything associated with the factory, you add it together and you get your total. Then you can calculate your total manufacturing cost incurred for that year. You add your materials, your labor, and your overhead, and you get this number right here of 2,005,350. Now you get your total manufacturing cost. That represents your beginning working process plus your total manufacturing cost. That gives you 2,069,250. And then you deduct, if you have any working process inventory at the end of the year, which we did, we had 80,000. You subtract that, and that gives you your cost of goods manufactured of 1,989,250. Excuse me. So that is my cost of goods manufactured, and that it concludes my statement of cost of goods manufactured report. Okay. Now the second thing they were asking us to do is to complete an income statement. Okay. Okay. So for the income statement, we're going to start off with our sales. Okay. Remember, revenue minus expenses. That's what an income statement is. Sales is your revenue. So we're going to have our sales. So we're going to go and we're going to see how much do we have in sales. Okay, sales, we had 3,850,000. Okay, so let me mark that off. Sales, 3,850,000. Okay, 3,850,000, 850, 1, 2, 3. Let me put commas here. Okay. So we have sales of 3,850,000. Okay. Now we need to deduct our cost of goods sold. Okay. that we're going to do is we're going to start off with our finished goods inventory as of the beginning of the year. Okay. Finished goods inventory as of the beginning of the year. Okay. So these are the goods that are available to be sold from last period, but they have not been sold. So we transferred it over to this year. They're sitting in our warehouse. They're ready to be sold. 101,200. So that is what we have sitting in our warehouse available to be sold. Okay. Next, I'm going to go ahead and I'm going to bring in my cost of goods manufactured. Okay. Cost of goods manufactured. How much did you spend during the year manufacturing new product? Well, where are we going to get that number from? We're going to get that number from right there. Okay. So we're going to bring that number over here. Okay. And that number is 1,989,250. Okay. Now I can calculate my cost of finished goods available for sale. This is what we have in our warehouse available to be sold to customers. Okay. We have our finished goods from last year plus whatever we manufactured this year, which was 1,989,000. We're going to add those two together. That's going to give me 2,090,450. Okay. Now I am going to deduct my finished goods inventory as of the end of the year. Okay. Let me skip a line here. Finished goods inventory as of December the 31st. Okay. So let's see if we have any finished goods inventory. Yes. So at the beginning of the year, we had $101,200 worth of merchandise that was not sold. It was complete, finished, ready to be sold, but they had not been sold. They're sitting in our warehouse. At the end of the year, we now have $99,800 worth of merchandise that is still available to be sold. They're ready to be sold, completed, sitting in our warehouse. So I'm going to deduct that number because those goods have not been sold. Okay? So that's not minus 99,800. Okay? And let me scratch that off. So, this is how much we sold our goods for $3,850,000. And then we're calculating our cost of goods sold. We started off with goods available to be sold from last period of 101,200. During this year, we manufactured 1,989,250 for a total of 2,090,450. At the end of the year, I have $99,800 worth of merchandise sitting in my warehouse that has not been sold. Okay? So now I can figure out how much I actually did sell. Okay? So I can go ahead and I can calculate my cost of goods sold. So your cost of goods sold is basically going to be your cost of finished goods available for sale minus your 99,800. Okay. Now this number is 1,990,650. Your cost of goods sold number figure here will be a minus. Why? Because that is how much money you spent in manufacturing your goods. This is how much money you spent making your goods. The cost of your goods sold is 2,190,250. So that number let me see. I think I did something wrong. Wait, excuse me. So we have the 2,090,000. Let me get my calculator over here. 2,090,450 minus 99,800. Yeah, you see it's 199,0650. Okay, so then my formula was wrong. So it's equals the sum of these two. Let me see. Yes, there we go. I don't know if I was picking up something wrong. Okay, so that number needs to be a minus. 1,990,650. Okay, so that is my cost of goods sold. Okay, this represents the actual goods that were sold. Okay, you still have 99,800 sitting in your warehouse. That's why they were deducted. Those we're not going to include. So you had available for sale 2,090,000. We took out 99,800 that are still sitting in your warehouse. So that means that your cost of goods sold for the year was 1,990,000. Excuse me. Okay, here we go. Okay, now I can calculate my gross profit. Okay, gross profit. Well, you sold your goods for 3,850,000. That's your sales amount. You spent 1,990,650 making the product. Okay, so what is your gross profit? So we're going to subtract those. Okay, so your gross profit is 1,859,350. It's 3,850,000 minus the 1,990,650 gives you 1,859,350. Okay, so that is your gross profit. Now, after your gross profit, we still have other expenses that we needed to take care of. Excuse me. Okay, we have some operating expenses that we need to take care of. Okay. Okay. So let's look at the information that we have. We have two types of operating expenses. We have administrative expenses and we have selling expenses. So let's look at our administrative expenses first. Okay. Okay. So let's look at the information and we're looking for administrative expenses. Okay. So here we have office salaries expense. Office salaries. That's an administrative expense. Okay. Those are the people in the office, working on either selling the product, collecting the product, anything of that nature. Okay. So we have office salaries expense of $318,000. Okay. So office salaries expense. $318,000. Okay, let's mark that off. Office salaries expense of $318,000. Okay. Okay, what else do we have? Office. Here we go. We have a depreciation expense on office equipment, $30,000. Okay, so that is office equipment that we're using, our computers, our fax machines, our printers at the office, $30,000. Okay. Depreciation expense on office equipment, $30,000. Okay. Okay. So let me mark that off on my office equipment. There we go. So what else do we have? We also have, let's see, property taxes on the office building. This is anything that has to do with the office. $25,000. Okay. Property taxes on the office building, and that was $25,000. Okay. So do we have anything else that's related to the office? Well, we have advertising. No, that has nothing to do with the office. And we have sales salaries. Nope. Okay, so that's it. Excuse me. So we're going to add those three together. Okay. And let's see what we get. So we get $373,000 for office salaries expense, depreciation expense, and property taxes. Okay. Now we have our selling expenses. Okay. So for selling expenses, this is what we put in for selling, advertising, the people that are actually going out there and doing the sales, anything of that nature. Okay, so selling expenses, we have advertising expense, okay, of $400,000. That's the big one. Okay. Okay, let me mark that off. We have advertising expense of $400,000. Okay. Advertising expense of $400,000. And then we have sales salaries expense. Oh, I forgot. Look, I didn't mark that one. I need to mark it because then I'm going to forget that I used it. I used it right there. 31,700. Okay. So, going back, sales salaries expense 200,000. Okay. So, I'm going to mark that off. Okay. Sales salaries expense. These are the people that are in my sales department. Okay. And we spent 200,000. Okay. So we're going to add those together, and that's going to give me 600,000. Okay. So now I can get my total operating expenses. Okay. So your total operating expenses are going to be the 373, which is for your operating expenses, plus your 600,000 for your selling expenses. So you're going to add those two together. Now, because these are expenses, I'm going to put them in a minus sign or in a parenthesis because this represents that you had to spend this money. Okay? So you had a profit of $1,859,350, and you had to spend $973,000 of that money in your operating expenses for your admin and selling expenses. So now we can calculate our net income. Okay? Remember your net income. If your revenue is greater than your expenses, you've got income. If your expenses are greater than your revenues, then you've got a loss. In this case, my revenue or my profit is greater than my expenses. So I'm going to go ahead and I'm going to subtract. I'm going to do that. So I'm going to get my gross profit minus my operating expenses of $973. And that's going to give me a net income of $886,350. Okay. $886,350 is your net income. Okay. So let's run through the income statement one more time. You start off with your sales. This is how much you sold the product for. You figure out your cost of goods sold. Remember, you always begin with if you have any beginning inventory from last period. What you spend this period manufacturing to get your cost of finished goods available for sale. Okay. This is what you have available. Then you have to ask yourself, did I sell every single thing that I manufactured? The answer in this question was no. I still had finished goods at the end of the year that I had not sold of 99,800. So I'm going to deduct those because those were not sold during this year. Okay. So that means that during this year I sold 1,990,650. Okay. And because its cost of goods sold is an expense, I'm going to go ahead and I'm going to subtract it. So I'm going to get my sales minus my cost of goods sold. That will give you a gross profit of $1,859,350. Now with that money, you have to cover your operating expenses, which include your admin and selling expenses. Okay. So then we categorize our expenses by administrative and selling. So we had 3 admin expenses, which were your office salaries expense, your depreciation expense for the office equipment, and your property taxes on the office, which were $373,000. And we had 2 selling expenses. We had advertising expense for $400,000, sales salaries expense for $200,000, which gave you a total of selling expenses of $600,000. So now we have to calculate our total operating expenses. You add these two numbers up, And because it is an expense, this is money that you are paying out, it is going to be a minus or in parentheses. So that's going to be giving you $973,000. So once you have that calculated, you just get your gross profit minus your total operating expenses of 973, and that will give you a net income of 886,350. Okay, so remember, you're going to have something similar to this on your test. Now if we look at the data over here, I have used every single number provided. Okay, so I marked them off as I was using them just so it could be clearer for me. Okay, so that is the last problem that I am going to be going over. Remember, this is the last problem. Problem 15.5 is very important. When you're working on it on your homework, make sure that you grasp the content, that you understand what you're doing, because you will be seeing that on your test. Okay, I want to highly encourage you to please ensure to read the chapter, review the PowerPoints provided in Blackboard, listen to my lecture, and complete all of your assignments. Okay, you do have 7 full days to complete your assignments. Please schedule your time accordingly so you can have enough time to work on your assignments. If you have any questions, do not hesitate to contact me. I am available to help you out as much as I can. Just ensure that you do include your name, the question number, and your attempted solution so I can see what you're doing and I can provide guidance. Okay, I don't just simply give you the answer. I look at what you're doing and then I let you know what you're doing right, what you're doing wrong, and how to fix it. Okay? Please refer to your textbook. It has excellent examples. When you're working on your homework assignment on Cengage, there are interactive show me how videos embedded within the homework problems. Please review those videos as well for guidance. And that would be it for this chapter 15 lecture. I hope all of you stay safe and have a wonderful week. And until next time, thank you.